Hi, this is Vijay Bambani, and I hope you're keeping your finger on the pulse of the market. You're observing how the markets have had a mini meltdown on Monday, and as I record this video mid-session on Tuesday, I'm noticing that my trading terminal screen is awash in the color red. I hope you remember my videos about on 9th of September why I'm advocating caution, and on 1st of September I advocated why this could possibly be a good time to do nothing and definitely not buy afresh. I would strongly suggest that my viewers in this Fast Profits Daily channel subscribe to the Equity Master Telegram channel with the handle Equity Master Official. I put up 3 updates Monday to Friday late in the evening based purely on my in-house developed statistical trading model, and I put out data as to how the market is behaving. Based on that data, I found that the risk-reward ratio since the last 3 weeks or more was definitely not in favor of the bulls. I've talked about the Jensen's measure, where taking on 1 additional unit of risk must result in you earning at least 1.5 additional units of profits. Otherwise, the risk is not worth it. So based on my statistical model 3 weeks ago, I found that the risk-reward ratio did not favor the bulls. And therefore, along with other data like markets falling on higher volumes as compared to rising on lower volumes, and the market breadth being the number of gainers versus number of losers was definitely tilted towards the fall. That aside, in this video, I'm going to give you 1 additional data point which will interest you, and from my point of view, I think if you don't know it already, which you should learn for a lifetime. This video is all about IPOs. I noticed Equity Master has sent out mails, and there are also videos on this subject about how IPOs, at least 90% of the IPOs that are coming in the pipeline in the immediate future should be avoided. I completely agree with that point of view. Now, there are 2 ways to look at the markets vis-a-vis the IPO. First of all, as a behavioral finance student, lifelong learner of behavioral finance, do remember that everything in the market is relative. So time is relative to price, return is relative to risk, yield is relative to the investment. So you basically calculate one against the other. Nothing is to be taken in isolation. Today, I'm going to take the secondary market in relative comparison to the primary market or the IPO market. Now, seeing the success of the Happy Mind IPO and Root Mobile IPO, etc., you would be tempted into thinking that the IPO market is extremely bullish and the returns are superlative. No problem with that line of thought. I'm thinking from the behavioral point of view. Money tends to be finite or limited in everybody's hands. The richest guy in the world, may it be Jeff Bezos, may it be Warren Buffett, maybe Bill Gates, maybe Carlos Slim, have all got finite wealth. There is a number attached to the net worth that they have. They cannot write out checks to amounts of infinity and expect those checks to clear. We all have limited wealth. So does the collective market. Now, if at all IPOs are coming in and offering shares, investors also have finite wealth. And if the IPO is attractively priced, there is a temptation to sell in the secondary market to be able to subscribe to the primary market IPO. So historically, whenever there have been a spate or a flurry of IPOs being offered in the primary market, it has had a downward pull effect on the secondary market. Don't take my word for it. feel free to Google. Whether it is the Harshad Mehta boom, whether it is the Ketan Parekh boom, whether it is the 2007-2008 boom which terminated in January 2008, you will see that while the going was good, while the secondary market was booming, promoters of companies took advantage of the buoyant market conditions and floated a lot of IPOs. And that basically resulted in some selling in the secondary market, which triggered a decline. Now, the secondary market is a very unique creature. It pulls in people. As long as your neighbor is making more money by trading in stocks, you get tempted into getting in. But do remember, at the back of your head, you're always nervous. You're always fearing you might lose your paper profits. So the minute you see signs of selling or people getting off the bus, there is a flight towards safety, flight towards cash to lock in your gains before they evaporate. This is what is triggered when the IPO market starts to overheat. People tend to rush out of the investment door in the secondary markets, fearing that the other guys might just tear down prices. Let's get out while there is still profit available. This is what is possibly likely to occur if you wait too long. Remember, in the pipeline are IPOs to the size of which you haven't seen before. If the sections of the media which have reported on this issue are to be believed, the LIC IPO, which I can only call a whopper, a whale, a giant, is, hold your breath, to the size of 80,000 to 90,000 crores. Now, this amount of money is going to get sucked out of the secondary market. Would you like to be left holding somebody else's babies, stocks that are falling because everybody else has gotten off the bus? I don't think so. So whenever the IPO market overheats, it's definitely a red flag for the secondary market. The more IPOs that there are coming, do remember that equivalent amount of selling might, I'm using the word might here, unless you have infinite wealth, there might be a spate of selling in the secondary markets. This was a data point which I had not yet mentioned in my past videos, and I felt I was duty bound to update you of, and therefore I've recorded this video for you. On this somber note, I would say goodbye in this video, and we'll meet again in my next. If you're watching this video on YouTube, do let me know what you think of this video and what you would want me to record in my next. Don't forget to click like on this video and subscribe to my YouTube channel. Also, help me reach out to knowledge-based investors and traders who are looking for learning the 360-degree worldview of financial markets by referring my video to your family and friends. Do take very good care of yourself, your health, your family, your friends, your trades and investments. Have a very profitable day in the markets. Vijay Bambani signing off for now. Thank you for watching my video. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.